Welcome back, everyone. I hope you're doing well. And in this video, we're going to take a look at 3 of the top utility companies on the market right now. These stocks have consistent operations in a high barrier to entry market and have been providing investors with some nice high passive income over the past few decades. And utilities often get overlooked because they're boring. This is definitely not the most exciting sector to talk about, and in our current market environment where young investors are chasing the next stock that's projected to double in a month, there's very little interest in the traditional utility names that have provided consistent returns over the longer term. And I personally believe that a nicely diversified dividend portfolio should have exposure to the utility sector, and I actually own all 3 of the companies we're discussing today within my financial freedom portfolio that is now worth over $98,000. And before we take a look at that first company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And the first utility company we're going to go over in this episode is ticker NEE, which is NextEra Energy, and the company currently trades for $78 per share, and they're up close to 30% over the trailing 12 months. And this is the leader in the industry with the current market cap at $153 billion, a forward PE of 31.1, and a current dividend yield right around 2%. And NextEra does have the lowest current yield out of the 3 companies we're going to discuss in this episode, but they more than make up for it with their massive share price appreciation of 173% over the past 5 years, and they grossly outperform all their competitors in the utility sector. And this company operates in both the traditional space as well as the renewable industry as well. And through FPL, they are the largest electric utility within the United States, and their NextEra Energy Resources business is the world leader in electricity generated from the wind and the sun. So if you buy into this company, you get exposure to not only the traditional utility space, but also a growing renewable business, which is a market leader in both the wind and sun power generation. And over the past 20 years, NextEra has undergone a major expansion. Back in 2001, this company was the 30th largest in the utility sector in terms of market cap. But now, starting 2021, they have now expanded and grown to be the market leader, coming in as the largest company in the utility sector with now a market cap of over $150 billion. And even as the market leader, they continue to perform extremely well. And in the first quarter of 2021, their earnings per share grew 14% year over year, which is absolutely incredible for a big utility company. So even as the number 1 in terms of market cap in the utility space, they still perform extremely well with vast expansion in their total EPS. And their growing markets, which include the renewable space, are projected to grow at 15% annually all the way up to 2030. So I don't think this company is going to be slowing down in their revenue and earnings potential anytime soon. And if we take a look, over the past 15 years, their annual earnings per share is growing at a CAGR of 8.7%, which is absolutely incredible. And their annual dividend, starting back in 2005, has grown at 9.6% every single year. And this company has absolutely crushed the overall market. And over the past 10 years, they have a total return of 700%, which has absolutely destroyed the S&P 500, which has only returned 267% over that past decade. So NextEra has proven that they can outperform. They've been doing it for a long period of time, and as the number 1 company with a very large renewable business that's projected to grow at over 15% annually going forward, I don't think this company is going to be slowing down anytime soon. And we can see up until 2022, they project another 10% annual growth rate to that dividend every single year, with earnings per share continuing to grow between 6 and 8% over the next 2 years as well. And if we take a look at their dividend, although the yield is slower starting out, coming in at 2%, their payout ratio is extremely sustainable at only 61% of their net income, and they're growing it over the past 5 years at an average of 12.5%, and this is a dividend aristocrat with 26 straight years of dividend growth. And what's incredible is they have the highest dividend safety rating, coming in at a 99, which is considered very safe. And last year alone, they grew that payment by 10%. And I do own NextEra in my personal portfolio, and right now I have a total of 40 shares. It makes up around 3.2% of the entire worth, and I'm up 18% on this position, and my total passive income coming from NextEra is at $61 per year. And this is a company I have recently bought more of over its recent dip, and I might continue to add if the share price does fall over the next few weeks. And if we take a look at their financials, the company was growing annual revenue each and every year before the pandemic, and a slight pullback in 2020, but that was kind of neutral across the entire sector. But what's important is that their total cash flow from operations continues to grow over the long term, because that just shows that the amount of cash they generate from their operating activities is still growing year over year. And we can see as of late, there has been a pickup to over $8 billion of cash flow from operations. So I'm not too worried about the slight pullback from the 2020 decline. And going forward, I do believe they will rebound, continue to expand post-pandemic, and this company will be a long-term leader and a long-term hold in my personal portfolio. So right now, I own NextEra. I think they're a very strong utility company that has exposure to both the traditional electricity space as well as the growing renewable space through their NextEra Resources partnership, which once again has a strong future potential ahead. So NextEra is the first utility company in this episode, and now if we shift over into stock number 2, it is ticker DUK, which is Duke Energy. They currently trade for just below $100 per share, and over the past 12 months, they are up by 17%. This company has a market cap at $76 billion, a forward PE just over 19, and a nice high dividend yield of 3.87%. So right now, this is a company with the current yield right around 4%. So if you're looking for some nice high passive income, Duke Energy may be a stock to take a look at. And right now, the company has operations in both the natural gas and fuel oil, coal, nuclear, and only 8% of their business is in hydro and renewable. So right now, this is mainly a traditional company with very slight exposure to the renewable space. And since Duke has been operational for a very long period of time, and they already dominate their respective regions, the companies look for acquisitions to expand their total operations outside of their current markets. And their 2016 Piedmont acquisition has been paying off extremely well, and over the past 5 years, the CAGR has been at 25% per year for that acquisition's net income. So the management and the execs have proven that they know how to deploy Duke's capital and have been pursuing deals to help expand the company's operations outside of their current locations. And right now, the company believes over the next 5 years, they can grow their annual earnings per share between 5 and 7%, which would be absolutely amazing. And tied along with their 4% current dividend, the company believes that that 4% current yield in the form of quarterly payments, plus the long-term 5 to 7% annual earnings per share growth means they can return an average of 10% annually to their shareholders over the next 5 years. So with the average S&P 500 return of around 10% over the longer term, if Duke Energy can match that while providing a 4% dividend yield, it may be a great holding to own within an income-producing portfolio. And if we take a look at their current dividend scorecard, right now the yield comes in at 3.87%. Their payout ratio is around 75% of their net income, which is on the high side for most companies, but in the utility sector, anything around 80% or lower is manageable due to the nature of their business. And over the past 5 years, your annual payment is growing at 3.2%, and the company has a safe dividend coming in with an 80, so it's somewhat unlikely that we see a dividend cut coming anytime soon from Duke. And now if we take a quick look at the company's financial statements, we can see that year over year, their total revenue was expanding all the way up into 2019. But like I mentioned with NextEra, the entire utility sector did see a slight downturn in 2020, but I think that's going to rebound over the next few years, and they'll continue to expand their total revenue over the longer term. And if we take a look at their cash flow statement, the company's total cash flow from operations actually expanded in 2020, which is absolutely incredible, to over $8.8 billion in the trailing 12 months. And we can see over the long term, they are trending in the right direction, which is exactly what we want to see. So Duke Energy is utility company number 2 that we're going to go over in this episode, and I do own them as well. And right now I have 23 shares. It makes up 2.3% of my entire portfolio. I'm up 18.7% on this position, and they provide me with $88 of annual passive income just for owning this stock. So Duke Energy was company number 2 in this episode. And now if we move along into the third and final stock we're going to go over, it is ticker SO, which is the Southern Company. They currently trade for $65 per share, and they're up 15% over the trailing 12 months, and they have a market cap of $69 billion, a forward PE of 19.7, and a massive dividend yield of 4.04%. And the Southern Company is very similar to Duke as they operate as a traditional utility in 3 main business segments, which include electric, gas, and state regulated. And all 3 of their business segments are projected to grow every single year through 2025. The electric is expected to grow at 4% annually, gas at 10%, and their state regulated at 5% over the longer term. And what's impressive is as a utility company with these 3 main business segments, they offer different rate-based growth over the longer term. So that's why I find these companies very attractive as income investments, because we can project over the longer term the expansion of their sales and their income and the ability for these companies to continue to return capital to their investors in the form of a quarterly payment. And if we take a look at Southern Company's dividend, we can see right now their yield is above 4%. Their payout ratio is right around 80%, so it is on the high side, but I believe at this current level, it is manageable for this utility company, and they grow that payment, averaging 3.3% every single year over the past 5 years. And right now, the company's dividend is considered safe. They're coming in with a 65, and that 65 ranking is on the lower end of the safe category. So although it is safe right now, definitely got to keep an eye on this company going forward and make sure their financials can still weather this dividend over the longer term. But I think right now the payment is safe. I don't think it's going anywhere anytime soon, and you can lock in a 4% starting yield at this current price. And right now I own 34 shares of this company. It makes up 2.3% of my entire portfolio. I'm up 27% overall. So that's another misconception. When people own utility companies, they expect no share price appreciation, and they think your total return is going to come in that dividend. So of course I am collecting $89 in annual passive income, but you can see for all 3 names, I'm up around 18% in NextEra and Duke, and now 27% in Southern Company. So you can get some nice share price appreciation, and your capital can grow while collecting a nice high dividend yield. And when I last purchased Southern Company, their current yield was at 5.13%, and that's where my current yield on cost is at this current level. And if we take a look at their financials, similar to the first 2 companies we've taken a look at, revenue was growing with a slight pullback as of late. And if we take a look at their cash flows, right now in the trailing 12 months, they've generated just under $6.7 billion of total cash flow from operations, which has been pretty consistent over the past few years. So definitely another utility company to take a look at, and they're the third and final stock we're going to go over in this episode. So in total, we took a look at NextEra, which operates in both the traditional and the renewable space, and they are personally my favorite utility company. They're the largest in terms of market cap on the global scale, and like we saw, they grew from the 30th position all the way up to number 1 in only a matter of 20 years. And then following that, we have Duke and Southern Company, both traditional-based industries. They dominate their respective geographical regions, and going forward, I don't see any competitors knocking them out of their already owned market, and they will continue to provide consistent cash flow every single year and pay out a very nice 4-ish% dividend to their current investors. So we can see those are the 3 names I own in my personal portfolio as well. So I do put my money where my mouth is, and I own the companies that I discuss with on this channel. So Duke, Southern, and NextEra, all part of my portfolio, and in total, my utility sector makes up around 7 to 8% of the entire $98,000 portfolio I have at this current point in time. So now we're going to wrap the video. I want to thank you for watching to the end. Please hit that like button and subscribe if you already haven't done so. I am the Gen Z Investor, and I will see you in tomorrow's episode.